Thanks so much for staying with us, everybody. Wow, the stock market taking a tumble recently. That was a couple of weeks ago. Since it's roared back. The Fed reportedly set to cut interest rates next month. And we have inflation out there. We have a presidential election. Here with his take is financial expert Gregory Ricks. Gregory, thanks for being with us. Let's go back to that Friday, Monday bloodbath where $1 trillion or something they say was lost. What caused something like that?
Fear, worrying about the U.S. economy, and worrying about the Fed that they're going to take too long to react. You know, they've tightened and everybody's expecting them to loosen up, reduce interest rates a little bit. And
so that was just a reaction. Now, a lot of people are saying it's a correction. To me, that's too big to be a correction. Some people were being very dramatic and saying we're entering a recession. I mean, was it either of those things?
Well, it was worry about the U.S. economy going into a recession, and that's what's fearful for the rest of the world. We're kind of the driver of the world's economies, and if we're in trouble, everybody else is worrying because we do so much buying. There's so much money. And people, other countries, other central banks use our stock portfolios as part of their backup on that. When you start looking at central banks across the globe, what are they holding?
And global
They're holding
markets,
securities.
And global markets followed our market into the tank that day. Now, but again, we've come back. So what fans the flames of erasing those losses? What's happening?
The buyers went back into the market, so they saw that, okay, things aren't so bad. It was just a quick knee-jerk reaction, but you probably had behind the scenes the Feds put out there like, look, here's what the data is. Just remain calm. We are going to start adjusting away from higher interest rates.
Now, for people who don't understand, I mean, you know how this works, but I'm guessing 99% of people don't understand the relationship, except if they're trying to get a mortgage, between interest rates and how markets respond to that.
And them signaling that we've got 100% bet right now. It's 100% in. There's a quarter point coming. There's no doubt, no worries. So that helps them. And then the market, if rates are going down, the market likes it because they're no longer going to be competing against yield, competing against money markets. People will start shifting back for growth to the market. So the market's going to be happy for a while, long as we don't show up as a recession. And that's part of another reason is they want this soft landing. So they've got to start easing interest rates. And
a quarter percent, is that your prediction?
A quarter percent,
because some people
is
have said they may
100%
go 50.
Well, we don't want to overreact and move too fast in that direction. And I've been all year saying we're going to get a quarter point in the fall. I've said it on my show so many times. But now I'm thinking we're going to get 50 basis points before end of the year. I think they're going to come back with another quarter after the election.
After the election?
Yes.
Because I was just going to ask you that. Because there are a lot of conspiracy theorists out there who are saying, well, the Fed, they're going to make these decisions in the interest rate to try to impact the results of the election. Historically, how does the market and what's happening with interest rates and everything, or concern over who may win, how does that kind of affect markets?
The markets don't care. I
Really?
covered it on my show recently, and when you go look at history,
so when they're not saying or favoring Trump or Harris,
no,
the markets don't care.
Now you'll have talking heads that will show bias, and you'll have billionaires speak that they prefer one or the other. I have preferences as well, might be for different reasons that you or an investor might have that. But when you look at history, it's kind of like, we're not really worried about it. We're worried about more of what is the Fed doing? What policies are they going to have in the future? What's even more important is what are corporate profits doing? We want the free markets to operate.
What affects it most? They say they wait for earnings reports. They say they wait for jobs reports. They say they wait for the consumer price index. all of these kind of data points matter? What do they look at most?
CPI is pretty important right now because of inflation there, but they're also looking at earnings, and earnings have continued to be strong. Now, we're also...
The jobs, not so much.
No, and that's what I was about to mention. Now we're seeing layoffs increase, which gives us worry about maybe a recession, which is why we're getting a quarter point. And some people have said, well, the Fed's behind now. They're going to have to 50 basis points. I don't think they're behind. I think they're right on time with the data. Now, I'm always kind of one to say, well, leave it to the Fed to mess it up. Well, it's too early for that, but what they're also dealing with is lags, and the lags are gone. This data is telling us what's happening right now.
Okay, I think that meeting's on what, the 17th of September?
Yeah.
All eyes will be on the Fed, and then of course, elections, the presidential election. Gregory, I wish we had more time. Thanks for being with us. Our kind of resident financial expert here at WLOX, Gregory Ricks. Always good to see you, Gregory. Thanks
You as
so
well,
much.
Dave. Thank you.
Solar